if the price is falling, it will affect you positively. Now,
How?
yes, because if you go to the market, if you want to buy something and they said, okay, the inflation has dropped, or something you bought maybe 100 Naira, you went back and you are buying at 19 Naira. The difference of 10 Naira, you use it and buy more.
Right.
Do you get the point? Use it and buy more. And that way, equally, the essence of the whole thing is to increase, to impact on your standard of living. So while your cost of living is dropping down, your standard of living is increasing.
Hello and welcome to Everyday Money Matters by Naira Metrics Television, your go-to guide for making smarter money moves every day. The spotlight today is on the recently concluded MPC meeting of the Central Bank of Nigeria, which took place on Tuesday, September 23, 2025. At this meeting, some major policy decisions were taken. The MPR was reduced by 50 basis points, now standing at 27%, and the CRR for commercial banks was cut to 45%. To help us unpack what this means for households, businesses, and investors, I'm joined by financial analyst Idika Aja. Welcome, Idika, and thank you for joining us.
Yeah, thank you very much, Oge, for having me. It's a pleasure to be here again.
Now to the big question. What do you think prompted the MPC to cut the MPR by 50 basis points at this time?
That's a very good question. But one, the use of MPRO is one of the tools the Apex Bank uses to control the economy in terms of liquidity and the system. Now, cutting the MPRO at 50 basis points means that the CBN wants to expand the economies. It's an expansionary monetary policy. And the reason could be maybe inflation has dropped, which we have seen for some time. Inflation has dropped for 50 consecutive time, and it's coming down, because normally why you increase the rate is to control inflation. Basically, it's to control inflation. So inflation could be one of the reasons. Then another thing, if liquidity has come down or liquidity has tightened, then you can now open up the economy to show up liquidity.
So are you saying the decision was more about stimulating growth than controlling inflation?
Like I said, it's an expansionary monetary policy. So that means you have to stimulate growth. So once the inflation is coming down, then there's no need to control the inflation is coming, and then you have to open the economy so that people can take more loans and invest. So basically, it's just to open the economy, because the reason behind is that inflation is coming down. I said this inflation, which has been coming down. At least the last time we had inflation is now at 20.13 plus from 21.88 in July. So, and we're definitely likely by the end of this month, by the time they release the numbers, it could come down also.
Right, but then inflation still remains a major concern for Nigerians. Do you think the rate cut strikes a right balance between supporting growth and curbing price pressure?
Yes, like I mentioned earlier, yes, the cut in rates is to open up the economy, because you have to understand the reason why they even cut rates. The reason why they cut rates is fine, because if they cut rates, the cost of funds, cost of borrowing will come down. And if the cost of borrowing comes down, people will borrow, and trades and the economy will open. So it's more or less bringing down, opening the economy, because they have been on tightening. That's what we call contractionary monetary policy, whereby you increase the rate to dissuade people from borrowing, because if the cost of fund is high, that will restrict people from borrowing, and that we are trying to control the economy. Now they have seen the inflation has come down and they want to expand, so that's why they cut the rates.
So what indicators will you be looking at in the next few months to show that these measures actually worked?
One, I think, first of all, you have to look at the GDP. That's account for the growth in the economy. That is one. Then consumer spending is another point. You have to look at consumer spending, how the impact on consumer spending, has it increased? That will now give you the yardstick to know, okay, fine, the rate cuts has come down. Then most importantly, you equally look at the corporate organizations. What are they doing? Has it affected their bottom line? That's their profits. Because normally when you cut rates, their cost of borrowing will come down, and that will now reduce their interest expense. If the interest expenses are down, of course, it will impact on their profit. So you equally look at their profit. In context, in 2024, when you look at what actually impacted those companies, especially the consumer goods sector and the industrial goods sector listed on the NGX, you can see that most of them declared losses. One, because of FX losses. Secondly, because of high interest rate. Now, towards the end of towards the end of 2024, that is in Q4, they started recovering. Why? Because of FX stability on one side. Now, remember that interest expense is still there because interest MPR was still at high level of 27.5. So that interest expense angle of it was still there. Up to half year 2025. Now, cutting the MPR will equally now lead to a repricing of those loans if possible. And when they are repriced, of course, by end of Q3, we're able to see the impact. Was in terms of on that corporate level, we're able to see the impact of the interest rate cuts on corporate. But generally, the general price level, what happens to consumer disposable income, how much we are buying, and how much we are spending will determine whether the impact is there or not.
Right. Let's talk about credit and lending. How might the lower MPR affect lending rate for businesses and individuals? Will banks be willing to extend credit?
Yes. Traditionally, when you cut rate, like I said, rate has come down to 27%. Although it is still high, but it is something. We are moving somewhere. Now, at 27%, give and take, when you go to borrow from bank, that means by the time they add interest and everything, we are looking at maybe around 29 or 30. Some of them will even give you a 31 or 32%. Now, with the rate cuts, marginally it will drop, right? So if it drops, that means your cost of, because the key thing is your cost of funds. Well, whatever thing you are doing, whether you are doing business or anything, if your cost of funds is coming down, that is great. That is positive, and it will multiply. It has that multiply effect down.
So you think that banks will actually pass this cost on to borrowers?
Yeah, expectedly, they are supposed to do that. But, we equally have a challenge. It's not only about cutting rates. It's equally about the credit environment. What is the credit rating of Nigerians? Do Nigerians pay back? So the bank will equally be sitting and watching to see, okay, especially the retail end of the economy, where you're supposed to or at least lend retail loans. So the credit rating means a lot. Not only, yes, the rate has been cut, but the credit rating means a lot. the environment, how good individuals, borrowers, how good are they willing? Do they have that background of paying back? So it is very, very important. Otherwise, bank will sit down and watch. I will even prefer, because to me, the most important thing is for them to extend that loan to the retail ends. If you go out there, reportedly, what you normally have, people that do, the financial institutions that do give loans to customer money, microfinance banks, all these loans and service, the banks might be, because of the credit rating, might concentrate on the big tickets.
Right. I'd like us to talk more about these small and medium enterprises. How will they be affected if banks adjust their lending practices?
Yeah, they like, okay, let me calm down. For instance, now let's say, okay, you are a trader, you are trading, and you need a loan. At times, people think that borrowing is not good. No, it is. It is. Yeah, it is good.
Okay.
It is good because, because maybe at times we avoid tax, we don't pay tax. That is where we think that it is not good. Because if you pay tax, you see the implication. But let me not go into that. But if you were borrowing at 30% and you are asked to borrow, to come and take fund at 28%, is it not better for you?
I guess.
Yeah, is it better? Is it not better for you? So that's just the notion. That's just in a simple term what it means for the rate cuts. Maybe we are giving you at 30% now because of the rate, because of the cut in rates. We can give you at 29 or 28%. Automatically, your cost of fund will come down, and if your cost of fund will make more profit out of from your business.
So how does this CRR for commercial banks, which has been reduced to 45%, how does it affect liquidity in the banking sector and access to loans? Okay,
the CRR, that's cash reserve requirement of cash reserve ratio. What it means that at 50%, it means that for every 100 Naira deposit you deposit with the bank, bank will give 50%, 50 Naira out of it with CBN untouched. Do you get the point? So that they are only authorized to lend 50 Naira out of 100 Naira deposit. For instance, okay, you have 100 Naira, you deposited 100 Naira with Access Bank. The CRO is telling you that, okay, that's 100 Naira, you only allow 50 Naira out of that 100 Naira to give to customers. So you return it. So with the cuts, reducing it by to 45% means, like what I said, is trying to increase liquidity. Instead, in banks have an additional 5 Naira per 100 Naira to give out.
Right. So let's talk about investors, what this means for investors, foreign, local. What message do these policy shifts send about the direction of Nigeria's economy?
One, if you look at for foreign investors, if you cut rates, definitely it will impact on fixed income assets, because now you've cut rates, the yield will drop. The treasury that were issued stop rate at 15% for 90 days. I think the other one about 15.6, I'm not too sure. Then the 365 days for about 16%. Now you can see that rate that was done on Monday. The auction was oversubscribed, especially for 90 days and 265 days. That is telling you that people were expecting that CBN will cut rates and they will want to lock in at a higher rate. So now the rate has come down. By the time they issue they do another auction, the rate might come down. And that's the basis. People now invest, even foreigners, that's foreign inflow. That's the basis. So the essence of it is that, okay, the rate has come down. Fine, what we are getting and not be the same thing what you got last year. But the beauty about it is that since inflation is coming down, because the essence of this thing is to have what we call the real rate return. Real return is the difference between the nominal rate and the interest and the interest rate. So if that's the inflation rate and the inflation between the inflation rate and the rate you actually get. Now, if inflation was 21% and return on asset is 22%, so you have a real rate return of about 1%. So now inflation is going down. Of course, the yield is coming down, but the major thing is that there should be a positive real rate return.
So is this a sign of policy consistency?
Yes, following the trends.
What about Nigeria's Eurobond market, foreign direct investment inflows? How will it be affected?
Yeah, for instance, it's not only linked to Nigeria. US cut their rates. As they cut their rate, that means as at last year, the NGX returned did better than S&P 500 index. So that means even the market, the broad market index, Nigeria did perform very well than US. So now with the cutting of rates in US, definitely there's supposed to be inflow into Nigeria. Now Nigeria has equally reduced their own. So we always check the gap between what you are earning in US and what you are earning in Nigeria. Not minding the purchasing power parity. I think we have to factor in. So yes, it is somehow linked together. It depends on, like, let me just come down like market A and market B. If market A is paying you 5% and market B is paying you 6%, what would you do? You go to market B because it's giving you higher interest rates. So that's the thing.
So for the average Nigerian salary earners, small business owners, households, what practical effects can they expect to feel from this MPC decision?
Okay, the MPA for salary earners, this is trickle down to salary earners, to everybody. Let me just illustrate this. Let's use BUF foods. BUF foods. Now they produce sugar and other things, homemade goods that you and I will use. Now, at a high interest rate, that means they are likely to borrow at a high rate, and they have to service that debt. If they service that debt, that will now, one, not only increase affecting their bottom line, they will pass that cost to you. To salary earners, because if I go and borrow, give me loan, I pay 20% and very high. I will not take that cost. I'll try to pass the cost to consumers.
Can you expand more on that?
Now, what I'm saying is this. I mentioned, like in 2024, most of them declared losses because of, one, FX, exchange rates. You know, all these things will equally affect exchange rate, but let us not go into that now. Let us focus on the interest expense. Interest expense means the interest, the money you pay for borrowing, for getting money from somewhere. Call it the cost of funds. So if you now borrow money, if the rate is high, you pay higher. And we pay higher and you use it to produce something. Of course, you would not like to take that hit. You would like to pass the cost to consumers. You can see even in the brewery industry, most of them increase their prices. What even helped them was price mechanism, where they kept on increasing prices to adjust to the cost, to the reality, and which one of them is high interest rates and inflation. Because high inflation rate, if you buy at a high rate, high rate will equally impact on inflation, because all those things will now induce costs and now increase inflation. So you can see how the thing works together. The same thing with banks. If you go and collect at a very high rate, the probability that you might default is there. So the bank has to make provision for it. And that will equally affect their bottom line and the ability to even pay dividend to their shareholders and investors. You see how they are linked? So that is how we call it macroeconomic variables, interest rates, inflation, unemployment, GDP. That's why you call them macroeconomic variable. All those things are variable that you cannot, when you talk of investment, that you cannot diversify. We call it systemic risk. So you cannot, so the only thing is that you have to work around it.
Okay.
So they affects everybody, down to salary earners.
So where will households start to feel the impact? Is it from food prices, rent, utility?
Yeah. Now, like I said, inflation is coming down. From in July, it was 21.88%. August came down to, I think, 20.13%. That's the general price level. And if the price is falling, it will affect you positively. Now, yes, because if you go to the market, if you want to buy something and they said, okay, the inflation has dropped, or something you bought maybe 100 Naira, you went back and you are buying at 90 Naira. The difference of 10 Naira, you use it and buy more.
Right.
Do you get the point? Use it and buy more. And that will equally, the essence of the whole thing is to increase, to impact on your standard of living. So while your cost of living is dropping down, your standard of living is increasing. And your saving too is increasing. So when you save, you go back to the bank. And the bank will now use that, multiply it, and make more money, and pay dividends to those who own it.
Right. I wanted you to highlight that aspect. Okay, so looking forward, do you think these measures will be enough to stabilize the Naira and support economic growth, or do you think that more aggressive reforms are needed?
Nothing is enough. It's an ongoing process, and the CBN keeps working on it. It's not enough. So the other things that you have to work to be able to stabilize the economy, not only the MPR, we have the physical side. So, MPR and CBN is just in charge of the monetary aspect of the economy. You still have the executive, that's the finance, that's in charge of the physical policy. So two of them, they work together. So it's not only on CBN. We're only focusing on CBN. We probably have to look at what the physical side is doing.
So what if these measures do not yield results quickly? What other tools can the MPC deploy?
Well, you wouldn't say there are a lot of like I said, there are a lot of tools you can use. MPRO is just one of the monetary policies you can do. There's open market operation where you sell assets to the public. You understand? Then you can cut money supply. So there are a lot of things you can use to address supply in a system.
Well, to round up, Idika, do you see the Naira stabilizing in the near term, or should Nigerians brace up for more pressure?
Naira is a function of price mechanism. That is when you look at the supplier and the demand side, the demand. So, and the ability of CBN to sustain it, not really heavily intervening. And we have been focusing on the demand side. So, with the Nigeria relies heavily on the revenue from crude, and if you don't make that money to be able to sustain, improve your reserve, that will equally affect the exchange rates and Naira. Now again, you equally look at inflow, because with inflow coming in, now you have cut the rate. That will equally encourage encourage foreign inflow to come in. As at right now, the equity foreign portfolio is doing very well. As at July 2025, we had about 6 trillion against 898 billion for the whole of 2024. you can see the inflow is improving. So with that inflow, that will equally help the exchange rates.
Thank you so much, Idika, for breaking down these complex monetary policy decisions and their impact on the Nigerian economy. From today's discussion, it's clear that the MPC meeting sends a strategic but mixed message: a lower MPR to stimulate growth and CRR to keep inflation in check. Let's see how that plays out on ground, whether banks would actually ease credit, whether inflation moderates, and whether ordinary Nigerians will feel any relief. We'll continue to follow up this developments closely, but for now, we thank you, Itika Aja.
Thank you again
for your time, and thank you for joining us. Until next time, I am Oge Obierika, and this is Everyday Money Matters.